over the past year has cut their prices 35% for their cars. Their prices have been cut 35%. They've produced more cars than they've sold, i.e. they have a demand problem.
Have you considered investing in Tesla or currently are invested in Tesla and then seen an analyst like Gordon Johnson over-exaggerate the potential risks? Well, you've come to the right place. In today's video, we're going to take a deep dive into his claims. Let us know if we dismissed them or missed anything down below in the comments. Also, as a bonus, we will see what a billionaire investor thinks about Tesla and why no other car company even comes close. Let's get it.
Gordon, you're the bear. And let me just say this, all right? And this is with all due respect, because I respect, you're a very smart man. You do your research, you do your homework. There are valuation models out there that totally agree with what you're saying with regard to Tesla and why it should not be trading where it is. But the market has been disagreeing with you. What is it going to take for the market to realize that you are correct in saying that Tesla is overvalued at this point?
Poor host. He had to stutter through that whole thing while calling Gordon smart. But anyway, Gordon, please let us know what you think.
Right. So, Dom, thanks for having me. I'll just remind you that in January and February of 2000, internet companies in both of those months doubled. And then they fell anywhere from 90% to 100%. So the market can get disassociated with reality. With respect to what Dan said, I feel like he's speaking in vagaries and platitudes. Let me
Vagaries and platitudes. The king of half-truths calling someone else vague. Okay, Gordon, please tell us more.
Platitudes. Let me explain. So with Tesla and 2Q, right, you have a company that, according to car gurus, over the past year has cut their prices 35% for their cars. Their prices have been cut 35%, whereas Ford's prices are down 1%. GM's prices are actually up 1%, and the average car on Car Gurus is down 4%. So if you cut your prices significantly, you're going to get higher volumes. However, in Q1, their earnings were down both quarter over quarter and year over year. That's not a growth company. For the fifth straight quarter in a row, they've produced more cars than they've sold, i.e. they have a demand problem.
So Gordon, didn't you just say that they moved higher volumes? And for those of you who don't know, that's code from Gordon, meaning they had a record quarter, as in they had record production and record deliveries. But that's what Gordon means by higher volumes, and that's how he came to them having a demand problem, because they broke records. Makes sense. Here we are on Troy Tesla's Twitter. He shows that he estimates about 16 days worth of supply for Tesla. I believe the industry average is around about 70 days. And if you look here on Guru Focus, it says the GM has around about, well, just over 42 days. Some of the competitors. Yeah, here we go. Ford, Lucid, Rivian. You get the gist. And on a unrelated note, first Cybertruck built a Giga Tesla. Demand problem, as Gordon puts it.
And you're talking about a company now that's going to see its gross margins drop from roughly 27% in Q2 of last year to roughly 16% in Q2 of this year. It's a car company. What car companies do is they cut prices to move metal. Tesla's doing it by the most. And remember, Warren Buffett reminded us, in 1905, if you looked at the car industry, right, there were 2,000 auto companies. Nearly every single one went bankrupt. So to choose Tesla as the leader when they're really the BlackBerry of EVs, I think is a mistake.
Okay, all right. So because I'm watching, I can see, I have the benefit of seeing both of you guys in front of me right now. Dan, you've been shaking your head pretty much the entire time Gordon's been talking. Why? He does make some interesting points here. Tesla is cutting prices, and they are producing more cars and not selling as many as they are producing. What's wrong with the argument there?
No, Gordon makes great points in terms of course, the price cuts, and that's well understood. I mean, my whole point is look at deliveries this quarter. This is a company right now that's going to be on a trajectory toward 2 million deliveries for the year. And you should look at margins. It's going to trough out over the next 1-2 quarters. Battery costs are continuing to come down. And I believe it continues to be Tesla's world. Everyone else is paying rent. The margin story, the cash flow story. And look, me and Gordon are always going to disagree here. But I think the market's telling you right now that this is an inflecting growth story because of the sum of the parts. And that's why I believe supercharger, I know that Gordon disagrees. I think batteries next and AI. I think that's why eventually we're going to be looking at $1.5 trillion to $2 trillion company over the next 2 to 3 years.
What are the margins on the supercharger? Do you know what the margins are? They don't make any money on that. Why are you saying that's something to be excited about? You know that they make no money on that. So why are you on TV saying that that's a positive when you know it's a negative? They were forced to open up their superchargers to get the tax credits as a result of the Biden. Biden said you can't get the 7.5 unless you open up your superchargers. That's a negative, not a positive.
But Gordon, to that point, when you go out, the reason GM, the reason Ford, the reason everyone's going to Tesla, they built it, everyone's calling. And now ultimately they will be able to monetize that when you look at the 25, 26, 27.
But they get a free supercharging network without, if you buy a Tesla car, you're going to have to wait in line behind a bunch of GM, Ford, every other automaker. This is not a positive, it's a negative. So I don't know why you're pushing this as a positive. One other thing, Dan, this is a company valued at more than the next 10 largest automakers combined, who is seeing earnings drop in Q1. They're already having to significantly slash prices, and they're not even selling what they're currently producing. And he's talking about building more factories. I mean, you have to know, this makes absolutely no sense. And I know the stock price is high, and I know you're excited about that, but stock price doesn't necessarily equal reality, and their margins are collapsing. Their sales are going to suffer because of these price cuts. And already in 2Q, they've cut prices in China, Australia, and Japan, soon to come US. So they're still having to cut prices when their competitors aren't cutting prices like they are. So supply, demand, price, they're cutting prices. That means demand is less than supply. Why is this something you're so excited about? I just don't.
Let's break this down. So what are the supercharger positives? Gordon, if you read Tesla's mission statement, which I'll bring up in a second, Gordon, does this not help achieve the mission, which I'll read now? Our goal when we created Tesla a decade ago was the same as it is today, to accelerate the advent of sustainable transport by bringing compelling mass market electric cars to the market as soon as possible. So I'll ask you again, Gordon, does this not help achieve the mission? As far as the deals go with Ford, GM, Rivian, and others, we have not been given the deals, so we don't know what the monetary value is. Again, Gordon doesn't know this, and neither do we.
All right, Dan, we could go on forever. I mean, this is a huge debate. I'm going to give the last word to you, Dan, because in my internal clock, I want you to respond to the litany of things that Gordon has just put out there. So the last word goes to you here, Dan, on why Gordon is wrong about the Tesla valuation.
As well as the bears, because and the reason they have been is because they view this as an auto company, and I view it as a disruptive technology company that ultimately, year by year, continues to further monetize from EVs to batteries, and I think eventually to AI. And I think Wednesday night, I think we sit here and ultimately the bulls win again. And I think this debate will continue to go on. Gordon raises great points, but ultimately, I believe the bears, are wrong here in terms of how we view it.
Bonus time, as promised, with the man, Ron Barron.
So the idea is there's only 6% of cars that are now electric, so there's 94% that aren't. There's also a 2 billion car fleet. 1% is electrified. So there's a really big opportunity for growth. Number one, the charging stations. That's an important deal because everyone's going to now know that they can charge their cars everywhere. Insurance. That's another thing that just helps people buy cars. Tesla's return on investment. So most companies, when they make an investment, they make a 15% return on capital. That's target. They won't make an investment unless they can make 15% return on equity on the investment, on capital. Tesla, when they were making a profit of $15,000 a car, they built a plant for 1 million cars, and it cost $7 billion. And that plant would make $15,000 in profit a car. They're making $15 billion on a $7 billion investment.
Ron, let me just interrupt for a second.
I think the host interrupted Ron Barron there because Gordon Johnson must have called up and or messaged saying, hey, you can't tell people that Tesla invested $7 billion to build one of their factories. Then once they reach production of 1 million cars, each car making around about $15,000 profit, resulting in a 200% per year return on their initial investment. Oh, what a horrible company, helping the world transition to EVs and making a great return for anyone smart enough to invest their money with them. Why would you invest in a company like that? Please tell me. I don't know. Tell me in the comments if I'm wrong. What am I missing? If you want to see and have some more laughs, or just want to see how wrong Gordon Johnson has been in the past, click on the playlist in the top right hand corner.
Man, that was an OG show.